The start of the year is showing some promising moves in the most important market indicators. I'm Tony with Clarkson Santoro, and this is our weekly real estate update for January 13th. In this series, we update you on the latest trends that are occurring in our real estate market here in San Ramon. Using our more than 50 combined years of experience helping clients buy and sell homes, we explain what those trends mean for you as a homeowner or as someone who is looking for a house that you will love to call home. Our current inventory is 16 homes. Last year at the same time, we had only 7 homes on the market. The average asking price this week was $2,309,000. Last year, it was $1,624,000. 7 homes, asking an average of $1,720,000 went pending this week, which is the same number of pending homes as last year, with a lower price than last year's $1,763,000. Only 1 home sold this week, with a sales price of $3,225,000. 4 homes sold in the same week last year, with an average sales price of $2,198,000. So now that we know how the market performed this past week, we can look at the broader trends that give us insight into the health of the market and help us understand where it might be heading. But before we do that, if you find this information helpful, you should subscribe on YouTube or follow us on Instagram so you won't miss the next update. You can also share this with a friend so they can be informed on their local market as well. Now let's look at the market indicators. Inventory continued to drop at the end of last year, and we are now sitting at the lowest inventory level in the past 11 months. After the crazy high inventory number we saw in the middle of last year, this low number is a great way to start the year. This low inventory number is what is helping keep the bottom from falling out on home values. We are giving this market indicator a score of 80 this week. The monthly turnover rate has remained under 1 for the better part of last year, and it only got above 1 a couple of times since everything cooled down in May. It dropped very low at the end of last year, which isn't all too unusual for the month of December. The good news is that it has come back up significantly since the beginning of the year, and we are now at a turnover rate of 0.73. That is still slower than a healthy normal market, but a great move in the right direction. This indicator gets a score of 40 this week. The next market trend that we watch is how much buyers are paying above or below the asking price of homes. This indicator tends to lag behind, along with the closing prices of homes, as the price was agreed upon over a month ago. With that said, the over-under metric is still in the under column to start the year. We have been sitting at the -3 to 4% range since November of last year. Hopefully with inventory low, we will see that number move in a positive direction in the coming month. The over-under market indicator gets a 30 this week. The closing sales prices also tend to lag behind the rest of the market indicators. This month is particularly difficult to get a good sense of where values are heading. We only had 1 home close this week, and it sold for over $3 million, which is well above the average value in San Ramon. With small sample sizes, numbers like that can quickly skew the average unrealistically. With all that in mind, the 30-day average sales price has been climbing rapidly since the middle of last month. Hopefully, we will see more homes selling on a weekly basis so that we can get a better grasp of value trends in the coming months. The sales price market indicator is at 70 this week. The health of the Silicon Valley economy is one of the metrics that had some negative movement. The Invesco QQQ dropped about 4% this past month, and there is still some uncertainty in several large tech companies' employment plans moving into this year. The overall health of the tech economy will continue to affect the buyer activity here in San Ramon. We are giving the Invesco QQQ a market score of 35 this week. Finally, as we look at the current interest rates, we get more positive movement, which has been an encouraging theme for the start of this year. After interest rates climbed to 7% at the end of last year, a rate of 6.33% feels like a breath of fresh air. And what's more important is that inflation rates are starting to come down, which should mean that the Fed will start to ease up on their interest rates increases. This week we are giving the interest rates a market indicator score of 35. Overall, the market indicators are showing positive movement and giving us hope that we will see a market that settles down and doesn't lean heavily in either a buyer's or a seller's market. It will be more obvious in the coming weeks if we have landed in a more stable market. we are scoring the overall market this week at 48. For sellers, I think the main takeaway is that now could be a good time for you to get your house on the market. As long as inventory stays low, it will increase your chances of getting a quick sale. For buyers, the timing is still good for you as well. Even though there isn't much inventory, the turnover rate isn't going crazy, which means you shouldn't be fighting with other buyers when you find a house you'd be happy to call your home. I hope this weekly summary and commentary helped you understand how our market is affecting your options. Let me know in the comments down below, or contact us directly if you have specific questions about how you can navigate this market to sell or buy a home. And if you find this information helpful, remember to share it with a friend and hit the like and subscribe button so you'll always be up to date on the latest real estate news here in San Ramon. Have a safe weekend, stay dry, and we'll see you next week with a new update.